Good evening. The Indian equity market suffered big losses today after the RBI disappointed market players by refraining from cutting rates and instead warned of continued inflationary pressures. Some economists had predicted a 25 bps rate reduction due to steep slowdown in the domestic economy and some softening in inflation. Rate-sensitive sectors like banking and realty were among the hardest hit. Defensives like IT, pharma and FMCG fared relatively better. The BSE Sensex was down by 243 points to close at 17,675 and the NSE Nifty was down by 83 points to close at 5,380. The BSE Midcap Index was down by 1.4% while the BSE Small Cap Index was down by approximately 1%. The India VIX on the NSE was up by 2.8%. The RBI warned that inflation pressure still prevails in the economy due to incomplete pass-through of high crude oil prices to the domestic fuel prices. It also noted the sharp jump in the government's fiscal deficit during the ongoing fiscal year. Recent growth inflation dynamics have prompted the central bank to indicate that no further tightening is required and that the future actions will be towards lowering the rates. However, notwithstanding the deceleration in growth, inflation risks remain, which will influence both the timing and magnitude of future rate actions. On the global economy, the RBI said that while the recovery in the US has been progressing, economic activity in the euro area has contracted. Although abundant liquidity injection by the ECB has mitigated the immediate pressures in the financial markets, a credible solution to the sovereign debt problem is yet to emerge, it added. Separately, the government released the economic survey for fiscal year 2011-12. The survey said that centre needed to boost tax revenues and cut expenditure to rein in ballooning fiscal deficit. The economic survey said that a lower fiscal deficit will help investments to rebound. It also mentioned that a new fiscal responsibility and budget management framework is on the anvil. The union budget slated for Friday may give some indication on this roadmap. Meanwhile, the India income deposited in the fourth quarter advance tax with the government today. As usual, it is quite a mixed bag and doesn't help in drawing any conclusions about the corporate earnings. Asian stock benchmark struggled for decisive and clear direction today following a flat finish on Wall Street. Stock indices in China, Hong Kong, South Korea and Australia paused while a weaker yen supported Japanese stock. European stock markets opened lower but the Stoxx Europe 600 index pulled back to trade largely flat. The DAX in Germany and the CAC in France were up marginally while the FTSE was slightly down. The yen weakened to an 11-month low against the dollar. Asian currencies fell on speculation that a steadily growing US economy could force the Federal Reserve to drop the idea of another round of quantitative easing. Thank you. Wish you have a great evening ahead.